You are listening to ChartingWealth.com for Wednesday, the 29th of June, 2016. What do we have going on? Well, we told you to watch out for a bounce. We said that the market could have been, particularly looking at our 4-hour chart yesterday, hitting along a bottom. What did we see happen today? It could be a dead cat bounce. Sometimes people say, what is a dead cat bounce? Well, a dead cat bounce, think of a dead cat. They stiffen up and you can throw them off a roof. And what do? Well, they bounce. They bounce one time. That could be what we see happening. Could be a dead cat bounce. The market was up 1.77% for the day. We have a new 2-day candle forming, so we have a green up candle. And that green up candle is what we typically call a tweezer bottom if there weren't any wicks on the bottom of those candles. There are wicks. And again, this is a Hinken Ashi type candlestick. It's different than most. So what do we have going on? Well, we've got a red down candle followed by a green up candle. Again, that candle is not finished drawing on our 2-day chart. It's only the first day of a 2-day candle. The candle will end at the end of the day on the 29th. Now let's look intraday to get a better figure. Oh, and for the record also, just again to show you the importance of these charts and what we use. Our derivative oscillator has continued to accelerate down even with the up movement for the day. And we also have the MACD and the signal line continuing to move down. Now the MACD did kink in a little bit, but again, they are still apart and still moving down, both of the lines, both the signal line, the red signal line, and the blue MACD line. Now let's look intraday, see what we see on the 4-hour chart. We see two open box green candlesticks with the one in the morning has a wick only on the top, a little wick, and then the one in the afternoon, a little bit of a wick on the bottom and a wick on top. Again, green open box candles. The movement started in mid-candle of the down candle for the afternoon on the 27th. So again, a bit of a pullback for those of you who want to use candlesticks to potentially get into patterns. And again, we're still in a confirmed down pattern. If you see red candlesticks forming after these two green up candlesticks, that could be, again, we say could be a portent of the continued down move recurring. We don't have a total pullback, that is a checkoff yet. We have down movement. We would technically want to see the 4-hour chart crossover going up for a proper pullback and then rotating back over for more down movement. We know how that works. If you don't know how we make our calls and how we read these charts, please sign up for our newsletter. You can go to chartingwealth.com, put in your first name and your email address. We'll send you every day exactly what you're hearing right now, our review of the markets, plus you'll get a weekly review and forecast, plus you'll get a link to our How to Read a Stock Chart video, our 15-minute video that informs you what we're talking about right now. We do see on the 4-hour chart a slackening of the downward momentum in the derivative oscillator, and we also see a converging, again it's not crossed over yet, but a converging between the MACD and the signal line, still far apart. But we do have two green up candles at this point on the short chart. And again, remember, short chart does not make the long chart by far. Short chart is 4 times smaller than the 2-day chart. Remember, 2-day, half-day. Math is easy there. Now, let's go look at the S&P 500. It was up more than the total market. S&P 500 is represented by SPY. It was up 1.8%. And again, we have a green up candle followed by that red down candle, well, previous red down candle. Derivative oscillators continuing to gain steam. MACD and the signal line continuing to move down, very similar to the total market. We look at the 4-hour half-day chart. We see about the same charts that we saw earlier. Had a little bit of down movement in the morning and just up movement in the afternoon with a bit of a pullback. We see the signal line and the MACD coming closer together, and the derivative oscillator losing energy again on the short chart, not on the large chart. And remember, the large chart is where you make the large dollars. That's what we use to help us determine the real trend in things. We may have a pullback underway. And again, keep watching these candles if you want to use the Hinkin-Ashi to try to find an entry point rather than waiting all the way for the crossover going up and a confirmed pullback. More danger, but again, we do allow our Hinkin-Ashi candlesticks. Now, let's go to our last index to look at before we get to gold, and we see the biggest moving index for the day is the Qs. What is QQQ? Well, that is the symbol for the Nasdaq 100, and it too had an up day. We actually see the Nasdaq 100 up 2.19% for the day. Again, derivative oscillator, even with that up movements, continued to accelerate down. The MACD and the signal line continuing to move down. The MACD did kink in a little bit, but still everything is moving down. So could be a dead cat bounce. We'll continue to monitor. What do we see going on the 4-hour chart? Very similar up movement. Now again, the MACD, the Qs, the Nasdaq 100 was up strongly, much stronger than the other indexes. Again, 2.19%. Just up movement in the morning and the afternoon too. Green up candles with only up wicks. We do see the derivative oscillator losing energy, and we see the MACD moving toward the signal line. No confirmed pullback yet, so pay attention. And again, remember that movement throughout the course of the day wasn't even as high as the down movement in the afternoon on the prior day, the 27th. Now, lastly, we're going to go to gold. Going to range back out to our 2-day chart. Take a look at gold, which was down 1.07% for the day. Again, gold had a huge 2-day up candle on the ending on the 27th. 28th is only half of the 2-day candle. It's just 1 day's worth of movement. It is a red open box down candle. Again, not a strong down candle, not a red solid strong down candle with only a down wick, actually a red open box candle. And again, gold down 1.07%. Want to see how that candle ends up closing out. Was a little bit of a loss in the derivative oscillator, still positive, but got a little smaller. But the MACD and the signal line continuing to move up. So we'll see if this was a dead cat bounce in the big markets and gold just burned off a little bit of energy, and we'll continue that pursuit of higher movement in price. We don't know that. We're going to check. We do see 2 red down candles with bottom wicks, so again, strong down movement, as we can see from the 1.07% loss. Again, that down movement is barely, well, in fact, that down movement, it didn't go below where the market went up during the afternoon on the prior day on the 27th. Derivative oscillator did lose some of its energy, still green, but is not as high as it was. And we see that the MACD is moving toward the signal line. Again, still a lot of space to make up there. So we'll continue to watch and see. Again, if you're looking to get into gold, if it turns around and closes the morning with a green up candle, some of you experimenting and practicing may want to see about getting in. If it's going to continue that up movement, just wait and see. There's a lot of digestion going on. Realize that we are far below where the original high was. Actually, the high back there on the first day of the bump up on the 24th. So that is where we are as we end the day on Tuesday, going into Wednesday the 28th. You have questions, problems, concerns, we'd love to hear from you. Have some new training we're working on now. Hope to get out here very soon. If not today, it'll be hopefully before the end of the week. We do appreciate you being with us. We love to hear from you. You have questions, problems, concerns, let us know. You want to help us out, go to iTunes, subscribe to this podcast and our weekly video podcast. This is an audio podcast, The Daily. We would appreciate that. We would love to have a 5-star rating from you and say something nice about us. That helps us so much in the metrics, helps keep us in the top 10 of the stock market podcast worldwide. In addition to that, iTunes, YouTube. Thank you so much for about over 100 people that have subscribed in just the last few days. Once we hit 1,000 subscribers, we have thousands listen every week. But again, the hardcore are the subscribers. Once you subscribe and we hit 1,000, we will be able to offer those folks proprietary broadcasts. So please go to YouTube and subscribe. We very much appreciate that. And your iTunes subscription. Of course, none of that costs you anything. Thank you so much. Let us hear from you. You have questions, problems, concerns. We are here for you at chartingwealth.com.